Bitcoin is, to your point, they can only mine 21 million. That's it. That the government can't increase the supply of the base layer. That's a 100% certainty. So I think, and correct me if I'm wrong, but that would be your argument as to why we will see consumer price deflation if we were on a Bitcoin standard, because the government can't print money, you can't create more of the base layer, and therefore what we have seen throughout humanity is entrepreneurs going out there and trying to create efficiencies and sell things at a cheaper price, and therefore naturally with productivity gains you're going to see prices go down further and further and further, just like we saw in the 1800s.
Welcome back to the CoinBeast Podcast. If you are new here, my name is Luke, and as you could tell by that short and sharp little introduction, I recently had the pleasure of sitting down with the one and the only George Gammon. For anyone who doesn't know George, he has 500,000 subscribers over on YouTube. He recently had a very interesting debate with the one and the only Giga Chad, the Michael Saylor. And obviously, George has some very interesting opinions about Bitcoin and whether we could actually go through hyper-Bitcoinization and whether it will work. So I had the opportunity to have a little bit of an impromptu chat with George. We didn't actually know it was going to be an interview, so you could kind of tell with the dialogue here. George, myself, and George's research assistant, Josh, just got on a Zoom call, and we didn't really know it was going to be an interview. So we were just kind of chatting back and forwards, debating different ideas around Bitcoin, and it was, thankfully enough, it was recorded. So I thought, hey, I have to post this on the YouTube channel. There's lots of very, very interesting rabbit holes we explore in this one. We obviously talk about whether money printing actually causes inflation or not. We also talk about if we do hypothetically move to a Bitcoin standard, will that shrink the size of government? And we also talk about digital nomadism and the sovereign individual thesis. George, myself, and Josh, who is only 20 years old, we all kind of live that sovereign individual playbook. We all move around the world. And before we get into that unfiltered debate with George Gammon, I just wanted to quickly let you guys know that you can get 10% off your tickets for the 2023 Bitcoin Miami conference if you use a promo code CoinBeast. That is all one word, very easy to spell. Links to that is in the show description. And if you also want a new Bitcoin-only hardware wallet, highly recommend you check out the Foundation Passport hardware wallet. You can get $10 off that puppy if you use promo code Beast. And of course, check out CoinBeast Connect if you want to jump on a one-on-one video call with Bitcoin Pro that can help you out, whether it be for tax structuring purposes, setting up a Bitcoin mining operation, running a Bitcoin node, or any technical issues that you may have. Highly recommend you check out CoinBeast Connect. Without further ado, let's get into this chat with George Gammon and his little research assistant, Josh.
Be curious to get your view on this. Is if we move to let's say a Bitcoin standard where Bitcoin is just the only money, so basically takes the place of the dollar right now in the United States, under that system, what do you have a guess as to what government spending would be as a percentage of GDP? Or maybe a better way to say that would be government revenue, or the revenue they're collecting as a percentage of GDP. Going back, just to give you some context there, to the 1950s, regardless of the rate of income taxes and whatnot, you usually see about 18% of GDP that's being collected by the federal government in the form of taxes. So I would, but I don't want to put words in your mouth. I would assume that you would say, okay, well, there will probably be a form of tax, even if we're on a Bitcoin standard for the federal government. You'd have to pay in Bitcoin, but it might be lower or it might be higher. What were your thoughts there?
There's many thoughts. It's a great question. So I think firstly, I think Bitcoin's going to constrain government spending. So I think if a government's running a deficit, all of a sudden they're draining their finite Bitcoin reserves, and there's no bailouts in Bitcoin. So I think spending would have to be lower. And then secondly, I think to the point about what was the second point you raised there, George?
Well, really, that was the main point. If we were on a Bitcoin standard, what would you say the government revenues as a percentage of GDP would be? Understanding that going back the last, call it 70 years, they've hovered right about 18%, regardless of where the highest marginal tax rate is.
Yeah, so I think government spending is going to be lower. And then if we do hypothetically end up on a Bitcoin standard, I think that opens up an entire another rabbit hole. I think governments are going to look different. I think you could see some sort of fracturing in the nation state, and you could see like the city state kind of model with governments. So yes, there's still going to be taxes, but I think instead of actual explicit taxes, it's going to be different. It's going to be more like a contract where you enter a contract with your city state or your smaller government, and you say, okay, these are the agreed upon terms that I'm willing to pay this yearly contract. Let's say it's $3,000 to live at this city state. So that's a whole nother rabbit hole. But I think to answer the question, I think government spending is going to be constrained on a Bitcoin standard.
What are the components of Bitcoin that would allow us to get into that world where we've got a lot more control over government, and maybe at a local level or federal level, state level, if that even exists, we're able to say, hey, let's go into a contract. So if you don't abide by this contract, I can simply take back the Bitcoin, and then you're defunded. So I've got some sort of we'll call it leverage there. Well, I guess that's what components of Bitcoin allow society to do that.
Yeah, so there's two things. I think firstly, it's the transparency on the blockchain. I run a node for, I can do it for $50 on an old laptop, and I can see every single Bitcoin transaction that's taken place over the past 13 years. So I can track everything. So the transparency, that's the first point. I think secondly is the ease of self-custody in Bitcoin. So I've listened to yours and Snyder's debate about why we've never seen an inelastic form of money over the past 5,000 years. Somebody's always been able to monopolize gold and co-opt the monetary supply for their own benefit. And I think the biggest reason is because gold simply doesn't scale, and it's very difficult to take self-custody, and it's not divisible. So Bitcoin has the transparency, but it also has much easier requirements for somebody to be able to actually take self-custody of their Bitcoin.
Why haven't we seen full reserve?
So Bitcoin's not full reserve right now. Bitcoin's fractionally reserved.
So you would be someone that you would be a Bitcoin advocate that would be in the camp that if we do go to a Bitcoin standard, we will most likely see a fractional reserve type of system. Might not be banks, but large pools of money, and that will offer a higher interest rate to those customers if they allow their Bitcoin to be levered up as far as paper claims, IOUs, and then the market will actually accept those IOUs just like they would the underlying base layer.
I think they would initially. So I think there'd be a transitionary process. I think as you slowly start to enter the Bitcoin standard in, say, the first couple of decades, you're going to watch I think it's going to look like an 1800s free banking kind of era, where you're going to have these banks who are, taking custody of the Bitcoin for people, and they're going to be lending out paper receipts. So I think you're going to be under some form of fractional reserve. But as you see bank failures, like our good friend Sam Bankman-Fried with FTX or Celsius or BlockFi, as all of these exchanges go bankrupt, you're going to see a bank run. And I think the eventual, after, say, the first 2, 3, 4 decades of a Bitcoin standard, I think that you're probably going to have some form of full reserve form of money for the first time in 5,000 years, just because it's so easy to take self-custody.
So do you think, but again, I don't know that the self-custody is the same question, or the probabilities of self-custody impacts the probabilities of full and fractional reserve, because I think your argument there with full custody, going back to the 1800s, is that you really couldn't store, if you had a lot of it, you couldn't store your gold just in your back pocket or your backyard, so you'd have to give it to the bank. I get that. And then you'd get IOUs, which were actually more convenient to use in the real world. We'll call them paper banknotes. But then to me, that doesn't explain why the free market didn't gravitate to a full reserve system, and it gravitated to a fractional reserve system. You see, I don't know that the self-custody component is applicable, or maybe I'm just not seeing why, to that full reserve, fractional reserve. And then is it your opinion that if we would not have had the Federal Reserve, that we would have evolved from this fractional reserve system of free banking in the 1800s to a full reserve system, maybe in the 1900s?
Geez, there's some good questions. Look, I don't think so. I think so. The 1800s and the 1900s was kind of a different era. So the globe wasn't connected, not just in terms of monetarily, but there was no internet, there was no smartphone, any of those technologies. So I think it was a necessary requirement to have some sort of fractional reserve banking that enabled globalization and interconnectedness. But now today we are globally interconnected. So I see the need for fractional reserve banking lower, and just the fact you have this globally interconnected digital age that's sharing information all around the world. I think people are going to learn about fiat money and why we shouldn't be using fractional reserve banking. Just because I can zip a 60-second one of your videos over to someone in Nigeria or Venezuela or Iran, near instantly free. We have like the free flow of information. So I think the need for fractional reserve banking to kind of globalize the world isn't there anymore. I'm not sure if that answered the question. There's a bit of a tangent.
No, this is great. This is really good. So going back to the government revenue as a percentage of GDP, that would be lower, most likely. Right now we're at 18%. Where do you see that coming in? And again, I'll give you some context here. Prior to the Federal Reserve, let's say in the 1800s, free banking, I would guess it was around 3% as far as the federal tax revenue as a percentage of GDP. So if that's where we were under a strict gold standard and free banking, and now we're at 18%, where do you think we would be with a Bitcoin standard?
Okay, I understand your question now. I didn't understand it the first time you asked it. Sorry, I get it
no
now.
Problem.
So I think it is going to be, I think it is going to be much closer to say a 3%. And it's just because now we have this globally interconnected world. I see more and more jobs moving digital. And like if you're a digital nomad and if you're getting slugged like 30% taxes like I was in Australia, eventually people are just not going to have that. Like I'm not going to pay 30% taxes to be locked inside my prison room for 6 months a year because the government tells me there's a virus. I'm not going to have that. I'm going to move to El Salvador where there's 0% taxes. So I see like on this, I think Bitcoin is going to, it's not going to change everything, but it's going to change a lot of the incentives around government. So I see governments are going to have to change the way they treat citizens. Instead of citizens just being like tax cows that get milked for the government, they're going to actually have to start treating us like customers. And I see governments all around the world trying to compete for intellectual capital and the smartest minds around the world by lowering their tax rates. So I'm not sure how long that takes. Could be decades. Might not happen in my lifetime. But I see maybe in 50 to 60 years, I think tax revenue as a percentage of GDP is going to be much lower. It's going to be like 2-3%. But then again, like GDP is a flawed metric as well. Like,
yeah,
so
just
that's
using
another.
that, just kind of trying to compare apples to apples. So I think that's interesting. I guess I can see that for sure, that people will move. Where I hesitate with a large number of people moving is the fact that right now, as an American citizen, you can pay 0% tax in Puerto Rico. Yeah. And there are very few people. There are a lot, but relatively speaking, there hasn't been that many people moved as far as when you look at the percentage or the numbers of people in the United States, right? You take a percentage of that. So, and that's available to us right now, where we could go from 40% right over to basically 0%. And it's not that far of a flight, and you're right there on the ocean in the Caribbean. It's another thing when you've got a wife and you're trying to convince her, you know what I mean? Or the kids or something like that. But I do think that definitely could put some downward pressure. I agree with you. Now, on the other side of the coin, though, I would say that there could be a way for the government to collect more if they went from an income tax more to a transactional tax, such as a sales tax, because instead of trying to find the money, wherever it is from all the American citizens, they could just take it directly from the business at each point of sale. So they're not having to go scramble for it. It's just they have every merchant that would have a machine that would somehow be connected to this ledger system that you're referring to. So when I go spend my $5 to buy the Starbucks, there's going to be a dime of that Bitcoin transaction that will go directly to the government, and they can track that. If the business doesn't want to do that, they just don't get a business license. So how do you see that playing out?
Yeah, 100%. So just to address the previous point, I think it's going to take decades before we see that interstate migration. Like we're seeing the early signs of people leaving New York and California to places like Florida and Texas. But like you say, it's as a percentage, it's tiny. So I think it's going to take decades. And as the governments become more and more bankrupt, like we know they are, governments all around the world today have breached that 130% debt to GDP ratio, many of them anyway. They're going to, as a government is more bankrupt, they'll become more tyrannical. So I think it's going to take many decades for that interstate migration shift to happen, but it's going to be a long process. And
how confident, what is your confidence level that we would see lower revenue going to the federal government than 18%? Is that, would you have a 90% confidence that that's how it would play out? Do you have a 50% confidence? What would your confidence level be?
On a multi-decade time frame, probably something like 60 to 70% confidence.
Okay.
Again, nobody knows what a Bitcoin standard is going to look like.
Right.
I have no clue. I think it's going to look different, but.
Do you think that if we were on a Bitcoin standard, we would see consumer price deflation?
Yes, enormous consumer price deflation. And then to address that other point you made that I left about the sales tax, I think that's exactly what you're going to see. Because on a Bitcoin standard, I could be working for you, George, here in El Salvador, and you could be paying me Bitcoin privately, anonymously. The government can't track and trace it. So like right now, out of the 21 million Bitcoins that have been, that will ever be created, 19 million of them have been mined already. And I would say something like 12 to 13 million of the Bitcoins are anonymous, private, have never touched a KYC exchange. So that means the government's going to have a very difficult job tracking who owns all of that Bitcoin. So I think a sales tax, like a 5 or 10% sales tax at the register of every shop you go and spend at, that's how I see governments trying to get a higher portion of their tax revenue in terms of GDP. And that's even what Nayib Bukele floated as an idea for his new city that he's building. If that ever gets off the ground, he's selling those volcano bonds to build a Bitcoin city. He proposed a sales tax for everyone in that city. So that's what I would expect.
Yeah, and for me, that's great news because I'm not a fan of tax. But if it has to be a tax, I'd far prefer a consumption tax over an income tax or capital gains, something like that. Okay, cool. So now let's go back to the question of deflation. Bitcoin is, to your point, they can only mine 21 million. That's it. That the government can't increase the supply of the base layer. That's a 100% certainty. So I think, and correct me if I'm wrong, but that would be your argument as to why we will see consumer price deflation if we were on a Bitcoin standard, because the government can't print money, you can't create more of the base layer, and therefore what we have seen throughout humanity is entrepreneurs going out there and trying to create efficiencies and sell things at a cheaper price, and therefore naturally with productivity gains, you're going to see prices go down further and further and further, just like we saw in the 1800s. Would that be your argument as to why we will have deflation with a Bitcoin standard?
Not 100% of the time.
Okay.
So I think I listened to your discussion with Snyder, and you guys were making the argument that you could see fractional reserve banking on top of Bitcoin. And I believe that's what you're going to see for the first, say, 1 or 2 decades as we transition towards a Bitcoin standard. So when you have these banks creating credit and fractionally reserving Bitcoin, you could see consumer price inflation during those times on a Bitcoin standard. I think once you get to a point in time where hypothetically a large majority of Bitcoin is full reserved, or it's very close to full reserved, I don't think we're ever going to get 100% full reserved Bitcoin standard. But I think once we're at that point, or we're very close to there, I think that's where I expect to see like consistent, persistent consumer price deflation.
Right. And that's because that you've got a set number of currency units, even if there's, let's say you've got the base layer, even at that point, you got the broad layer, is let's just say 40 million when you include both. When you get to that level, they're most likely not going to create more. So even when you combine those two, you're still at 40 million. And that's where you get that consumer price deflation because the money supply isn't expanded at all, broad money or base money.
Exactly.
Yeah.
Can I ask you a question, Luke?
Hit me.
What would, if you get, after all Bitcoin has been created, what would bank lending look like under a semi-full reserve system?
Very different again. So I just think firstly, there'd be a whole lot less debt in the system because hypothetically, again, if we are close to a full reserve system, and that means if we are seeing consumer price deflation, that means people's savings are appreciating in value. So for somebody to actually go out there and take on debt, let's assume hypothetically that Bitcoin's appreciating by, let's say 2% per year. Let's say we're getting like 5% GDP growth on a Bitcoin standard per year. I think that's very conservative. But let's say 5% of that GDP growth per year is stored into the global savings account, so Bitcoin. So let's say Bitcoin gets 2% of that 5% GDP growth, and Bitcoin's appreciating by 2% per year. That means if you're going to go out there and go into debt and invest your capital into a business venture, that means you need to be sure that your business is going to be appreciating or making more than that 2% that you could otherwise be gaining by just holding Bitcoin in your own self-custody.
That's the risk-free rate, like a 10-year.
But under that system, who's going to make the loan? Because if you're under a full reserve system, where are you going to get the loan to fund your business? And when your currency is already appreciated, what incentive do you have to actually to create a loan under those circumstances? And what would the interest rate look like as well?
So I think the free market's going to figure a lot of it out. I think rates will be a lot higher. And I think who are you going to get the loan from? I can get peer-to-peer loans right now on Bitcoin exchanges where I don't actually give up the custody of my Bitcoin.
Yeah. So, and I think these are good answers, but I don't, and those are good questions, but I don't want to go too far down that path because that gets us more into, I think, the fixed money supply versus elastic money supply. But let's just go back for a moment, Luke. So I understand what you're saying about deflation. Do you think there is almost a one-to-one relationship as far as the currency units created and the level of inflation? In other words, if you create one additional currency unit, are you someone that believes that we will inevitably or eventually see 1 unit of consumer price inflation?
It depends what the banks do with those reserves. Like the banks could just be sitting on those QE reserves, and if they don't lend or they don't feel like lending, none of that inflated money supply gets into the real economy.
Let's for a moment assume we're talking specifically about M2 under the current standard or a Bitcoin standard, where the currency units circulating in the real economy, again, we'll just use M2 as a proxy. If we increase that by 1 unit, then we eventually will see 1 unit of consumer price inflation.
Más o menos.
Yeah,
more or less.
Okay.
Yeah.
Let's go through some charts here, and I'd love to get your view.
Please.
Do you need me to share? I have the chart up right now.
Oh, I just did a screen share.
Yeah,
so let me see if can you see this, Luke?
Yep.
Okay, cool. So the first, and my position here is not Bitcoin will not be global money. It's not Bitcoin isn't valuable. It's not Bitcoin is a scam. It's not the government will ban Bitcoin. It's none of these things. So getting back to this chart, which is really cool. We got M2 money supply. We've got consumer price index CPI versus GDP. Now this is nominal GDP. So if you look at, this is going back to 1867 to 1899. And what's really cool is you can just see the cumulative percentage increase or decrease. So we go from this basically 30-year period where you can see M2 money supply went up by 400%, almost 400%. But during that same time frame, we had 45% deflation. And what's even more staggering and more incredible is that we had 117% nominal GDP growth. So if you actually do the math, the real GDP growth would be closer to 300%. And so if we were to assume that if you increase the money supply by 1 unit, you will get, even if it's base layer, you will get an additional unit of inflation. We can see that is not true. That is, at least during this time frame. Now, maybe it would be true in the future, but we can show that there's been periods in U.S. history where that is unequivocally false. And therefore, there isn't as much, it's not a 100% certainty here. Now, the argument is going to be, well, George, if we would have created less money, so let's just say there would have been a 300% increase in money supply, you would have seen even more deflation and even more benefits that would have been accrued by society at large. Okay. For that, let's just go ahead and go to 1930.
That's a brilliant chart. Like, that's really cool.
Great, isn't it?
Yeah.
It is great.
Let's
so now, but let's look at M2 money supply right here. It grew by same thing, almost 400%. In fact, it grew less than it did before. But instead of 50% deflation, we had 74% inflation. So less money supply growth, but yet far, far, far more inflation. So I don't think you can argue definitively. Obviously, there's times in history where you could argue this, but you can't say that if we move into a Bitcoin standard, that even if we keep money fixed, that this will never, ever, ever, even if you don't have fractional reserve banking, even if you had a full reserve, I don't think you can argue definitively that we would see consumer price deflation. Because what you do, and when you go to the 1960s and then you go to today's date, what you'll see is that there isn't a real good correlation between the money supply increase and actual increase in consumer prices. So this leads you to the question of what is it? If it's not this monetarist view, then what is creating this inflation that we all agree is so insidious? What are your thoughts?
So firstly, that's a brilliant chart. I think maybe the reason you saw such massive deflation in the 1800s while seeing an inflating money supply, if I had to guess, like, I'm not sure, if I had to guess, maybe the reason for that was because in these late 1700s and 1800s, we're coming off the Industrial Revolution, the invention of railways, the steam engine, electricity, steel. And maybe we saw massive population growth in America. So maybe that required a large money supply growth. Again, I'm not sure. But that's I think technology plays a very, very large role. So that's my first kind of knee-jerk reaction to it. I've obviously never seen that chart, so I'd love to. I'm going to sit down and stew on that chart when I get off this call because I think it's brilliant. But I think once you kind of once the globe's globally connected, like in the 1800s again, we were picking all of the low-hanging fruit in terms of technological innovations. And even into like the 1950s and 60s and 70s, we were still kind of picking low-hanging fruit. Are you guys familiar with the thesis, The Great Stagnation by Peter Cohen?
No.
Peter Thiel talks about this thing called the Great Stagnation. He asked the question, why has our physical world pretty much stagnated since 1970? Because he says if you look back 250 years from the Industrial Revolution, we've literally gone from living in farms to today living in megacities. So we've had the Industrial Revolution, the invention of railways, steam engines. We're utilizing coal as an energy source. We upgraded to oil as an energy source. We had the invention of automobiles. But then kind of since 1950, 1960, 1970, everything in the physical world has stagnated. So the max speed of airplanes has stagnated since 1970. There's another brilliant curve. It's called the Henry Adams curve. And it's articulating a similar thing. It tracks the amount of energy usage per capita that we've used as a civilization since the 1700s. And we've actually used an exponentially increasing amount of energy since the 1700s, all the way until 1960, 1970. And then again, we stagnated. So Peter Thiel and Peter Cohen, who wrote the book, The Great Stagnation, they're kind of like, what's causing the stagnation in our physical world over the past 50 years?
But Luke, if that's true, what you're saying, that we've already picked the low-lying fruit, then how does Bitcoin fix that?
So I don't think Bitcoin fixes anything directly. Like I think...
like how would a fixed money supply take us back to the late 1800s?
So I think firstly, it will decrease the size of government. It's going to be a multi-decade process, but one of the reasons that Peter Thiel and Peter Cohen talk about for the stagnation is they say potentially it could be increased government regulation. So the Department of Energy was created in 1970 something as we started using less energy. So Bitcoin and Bitcoin mining actually incentivizes the build out of renewable energy, and it also incentivizes the usage of more energy as it can be used to capture wasted energy like flared gas and obviously hydropower, excess, all of these wasted energy sources. Even in Guatemala, people are mining Bitcoin with used cooking oils. And in Mexico, they're mining Bitcoin with wasted pig shit. So I think Bitcoin incentivizes the usage of more energy. And I hope it puts us back onto an increasing trend of energy usage. Because like obviously we both agree ESG is dehuman, and it's Klaus Schwab's wet dream for the world where we all use less energy. I think that's anti-human.
Yeah.
So I think that's one. I think there's two ways. Bitcoin incentivizes smaller government, so less regulations, lets the free market and the capitalists actually go out there and do what they should be doing, innovating for society without being taxed 30 or 40%. So that's the first thing, less government. And the second thing is more energy usage.
Okay. So we might, because the low-lying fruit was back in the late 1800s, we might not get to that level, but we would get to a level where it's far better than it is today. Now, this is interesting because let me go ahead and go through the rest of this chart, and I think it's going to dovetail very well on what your views are, and I think it's going to give you a lot of food for thought. So let's go from the 1930s here, where we can see that they're really, if it's just about money supply, then you're wrong. You're wrong. And I'm not saying you, but whomever, right? There's got to be something else going on here, or else you would see, if it was just money supply, you would see the inflation rate be right back down near 50%. So if we keep going, we go 1960 to, let's say, 91 roughly, we can see again 1,000% money growth, but we've got an inflation rate now of 359%. Again, that delta between the two is significantly different than the two time frames you saw before. So leading us to the conclusion that maybe there's not this one-to-one relationship, and maybe there's something else that has a bigger impact on consumer price deflation. Now we go to today, and then you can see a dramatic increase, especially the last couple of years, of M2 money supply. But then you do see this 120% inflation where just going back to that 1800s example, we're right about 400%, but yet we are at 50% deflation. So we might have a similar delta there, but it just is really fluctuated as we go through all of these decades. Now, what I think you'll find very fascinating is if we also look at real GDP growth, because right here we got nominal. And when you look at nominal, can't really come. Yeah.
George, which GDP includes government spending in it?
Well, all GDP.
Okay.
All GDP. So you're thinking the right way here, in my opinion. And so right here we've got 100% nominal GDP growth with, call it, 45% deflation. So I did the math here, and that gives us a real GDP of 300%. So assuming that this is a decent proxy as far as how well the economy is doing, we've got 300% growth in the economy between this, call it the end of the 1860s and 1900. Okay, now we move on to that same time frame, 1930 to, call it 1960 or so, or maybe 1929, 1960. And this is when, if you remember, we had the lower monetary growth, but much, much, much higher inflation. And you see that nominal GDP was around 400%. So if you do the math here, now all of a sudden, the real GDP growth, 200%. So we've gone from 300 down to 200. Now, go ahead.
No, I was just going to say that was when the governments were deleveraging themselves in the 1940s, during World War II and after World War II.
To a certain degree, but on net balance, they were increasing dramatically. So here we go to, I'll just give you the punchline. At this time frame, the real GDP growth, 136%. So we've gone from 300, 200, 136. And then we go to the last time segment, which is 1991 to today's date, roughly. And we're all the way down to 94%. So going back to your point that you kind of brilliantly came to, maybe just inadvertently, is when you look at real GDP growth, it's tough to find correlation between the money supply, deflation, any of these things. But one thing that you see an exact correlation to is government spending as a percentage of GDP. During this time frame, when it's down here under 10%, this is when you're seeing this 300% growth.
What time frame is that? Sorry, George.
Roughly 1870 to 1900.
Okay, so you had smaller government in those 30 years, and
Way smaller.
And that was when we saw the massive deflation with increasing money supply and increasing GDP.
Correct.
Interesting.
And then we go to 1930 to 1960, where we can see right here, you have a massive growth of government when you look at the spending as a percentage of GDP. Massive. Now, you said that in the 40s, we had the big spending increase due to the World War, and we came back down. Correct. But look where we came back down to. A much higher level than we were prior to the war. And this included the 1930s depression when FDR was spending money like a drunken sailor.
Mm.
And this goes up to a point in 1960 where federal is now at 30% of GDP, federal spending. Then we go to the next time sequence where we go from, remember, 300%, 200%. Now we go down to 136%. And we can see what happened to government spending. It went up again. And then we go from 90, this point right here. And keep in mind, this chart only goes to 2018. If this chart continued, it would go like this. And then right here, it would go parabolic. And it would go back up to a level almost where we were in the 1940s, yet not in wartime, where we are today. Let's just call it 50% government spending as a percentage of GDP. So you see a net increase, just like we've seen all these other time frames, And just as we had a net increase in government spending as a percentage of GDP, we saw a net decrease in real GDP growth. So my point is there's a far lower probability, or the amount of revenue, the amount of government spending is far more of an unknown than the fact that the base layer of Bitcoin cannot exceed 21 million. And if you're trying to predict deflation, you can't really do so accurately by just looking at money supply. You have to more so put your priority or your emphasis on government spending as a percentage of GDP. And that's far more of an unknown. So now I'm not saying that you wouldn't have less government spending. Maybe you would, but maybe you wouldn't. It's far less certain than just saying there's 21 million Bitcoin. Not to say don't buy Bitcoin, but to say make sure that you're buying it for the right reasons and you got your focus on the right thing. You're focused on money supply, money supply, money supply, money supply. And maybe your focus should be more on how Bitcoin can reduce government spending as a percentage of GDP.
Nobody in the Bitcoin space talks about government spending as a percentage of GDP, and that's what's causing inflation or deflation.
Correct.
I haven't heard a Bitcoiner talk about that. I've heard lots of Bitcoin.
The main factor. It might not be I grant you, that if you had a lower money supply, you'd probably see less, but that's not the main factor, and therefore that's not what people should be really focused on, right? And if you want to lever up your credit card to buy Bitcoin, don't do it just because there's 21 million Bitcoin. Therefore, you have to have inflation or deflation relative to goods and services. Do it because you think that there's a 100% probability that government spending is going to go right back to where it was in the late 1800s. But I don't think anyone in the Bitcoin space would argue that that is as much of a certainty as Bitcoin base layer, not no one being able to increase Bitcoin base layer.
I agree. I think initially you asked me as we got on the call, what probability do you give Bitcoin actually decreasing government spending as a percentage of GDP? I think I said 60 or 70%.
That's why I asked you that question first.
Yeah. What's your probabilities on that, George?
I say probably the same.
Okay.
I think I think we would go to a sales tax. I think that interest rates would be higher. Therefore, it would incentivize governments to tax more, actually, because borrowing would be more costly. But how that would play out with people moving, I don't know. I think that's a complete unknown. It's just there's a lot of fun thought experiments to really go through. I think I could give a strong argument as to why government spending may be even higher, or at least government revenue. But I could also give probably a much better argument for government spending being lower, but maybe not getting back down to a level that we saw in the late 1800s that would make consumer price deflation inevitable.
I agree with all of that. All it is thought experiments. I have no clue what a Bitcoin standard is going to look like, but it's fun to think about.
Yeah, and just let me give you the URL if you want to noodle over this a little bit more, because they've got some super cool charts on here, like this one. It's got M2 yearly growth versus inflation. So this is not cumulative. This is just what it did every single year. The charts on here are just fantastic. This is
macro trends is really cool.
Oh, this is long-term trends.
Oh, okay. I'm not sure if I've seen this one or not.
Yeah, longtermtrends.net.
I sent it to your Twitter, Luke.
Legend, thank you. Can we go back to the chart just for 1 second? I want to look at a period of time, not this one, the long-term trends chart.
Yeah.
I want to look at between 1950 to 2000 because I think there's obviously, so I think there's more correlation during this period of time with increased money supply and increased CPI. Like they're not correlated, but the trend, they're both directionally moving in the same direction.
You wanted to go to 2000?
I think that's sufficient. I think that's okay. But
okay.
Yeah, like both the lines CPI and money supply growth are a little bit more correlated in the 1970s. Maybe it's just the scale, or maybe it's me just trying to convince myself. But it kind of looks as if consumer price inflation loses its correlation a little bit to money supply growth around
Oh,
1980.
I'm
And
sorry.
that's,
So what I should have, and I need to write that down because this is a great point, and I noodled over this, but what you'll find, Luke, is it goes right back to Friedman. Friedman was a monetarist, but people think that he saw that one-to-one relationship. But what he actually said is it's not the increase in money supply that matters. It's the increase in money supply above real GDP.
yeah,
That's when you get consumer price inflation. You have to look at if real GDP is humming along or projected next year at 5% and you increase the money supply by 5%, you're most likely not going to get consumer price inflation.
zero.
So that's why that real GDP metric is so important when you're looking at money supply growth.
Yeah, exactly. I was just going to say there could be a couple of factors why CPI stagnates there. I think 1982 was when, what are they called? What's the institution that changes the CPI inflation metric? It's on the tip of my tongue.
Oh, what is that? The Bureau
Yes.
of Labor Statistics, I think.
Yes, yeah, they started doing their handful of revisions in 1982. So that's maybe one reason why CPI looks as if it kind of stagnates around those early 1980s. And then another question I had was, I would love to see a chart of asset prices included on this chart, because maybe a lot of the money supply growth has been stuffed into assets and not necessarily the CPI basket.
Yeah, but see, with that, I struggle because there's going to be someone that's going to be receiving the money. So I think that gets very, very nuanced, because if you've got the average Joe and Jane that's let's say put them in the high velocity bucket. If they're buying from a private equity fund, hedge fund, then you're not increasing or decreasing the money supply as far as M2, but you're going from a high velocity bucket into a lower velocity bucket. But if you're going from average Joe to average Joe, then it will drive up the price, but then there's an average Joe on the other side that will take that additional purchasing power and maybe buy a used car or something. You see, it gets, when you start diving down that rabbit hole, especially when you start considering how money is created today, and very little of it is created by the government. Or that's another thing that Bitcoiners get wrong, but Austrians and gold bugs do too. They say, oh, when the government prints money or the Federal Reserve prints money, that's it can increase M2, absolutely, but it might not. It just depends on like 1,000 different factors. And again, there's not that one-to-one relationship because of how money is created now relative to how it was created like in the 17 and 1800s. But anyway, my point there is there's a lot of nuance. And, is it foreign buyers? That's another thing. If it's foreign buyers, they're taking dollars that were created in the euro dollar system, and they are taking those dollars to buy assets, and that could also increase M2. And if those foreign buyers turn into sellers and the people buying are domestic, then that could decrease the level of M2, because that's just strictly a measurement of the U.S. domestic economy.
That's a great point. And I agree. I think if obviously, like the wealth effect, as asset prices, hypothetically, if they are artificially pushed up due to increased money supply growth, some of that's going to leak out as people have their asset prices pushed up. They're going to withdraw some equity, and they are going to spend it to average Joe and average Jane, who does have that higher velocity in terms of spending. So you would hypothetically see an increased CPI.
Yeah, I mean, if you go just to the, let's go 19, where are we here? 19, why don't we go 1980? Because that's really when you saw that asset boom.
Yeah.
But here we've got, I mean, this is terrible. This is absolutely terrible. If you look at I mean, I can just, because I've got that, I mean, oh my gosh, this is just, so But here, look at this.
Yeah,
Look at
that's
this. Here, you've got 170% money supply growth and 80% inflation. How is that possible if you're just strictly looking at the money supply when you consider the late 1800s? We had 400% M2 and 50% deflation. And then you want to talk about an economy sucking ass. Well, I mean, do the real GDP on this. We've got 200% increase and 80% consumer product. I've got that calculator pulled up right here. I mean, this is going to be horrible.
Do you want me to plug in the numbers right now, George?
Or shit, where did that calculator? I had that.
I have it up right now.
Do you? Yeah, Josh, let me give you the numbers here real quick.
Yeah, nominal.
This is going to be atrocious. Type in for the nominal GDP growth, because I know it starts at 1 million, so it goes up 200%. So type in it goes up 200%. So type in 3 million.
3 million for nominal.
3 million nominal. And then type in to the deflator, type in 180.
Yeah, that's pretty bad. Real GDP 1.67.
Oh my
But
god.
again, what time frame is that again? Sorry, George.
1980 present.
81 to 2000.
So this goes back to the great stagnation thesis. The only innovation we've seen over the past, it looks like a Great Depression economy over the past 50 years.
Yeah, so just so you understand those numbers, Luke, what was it again? Josh, is 1.6?
1.67 for real GDP.
1.67. That means it's a 67% increase in real GDP. And remember, that's a compounded number, compounded from 80 to 2000, 20 years. And they only had a 60% compounded increase in GDP. And my guess is if you did a per capita real GDP, it would be negative.
It'd have to be.
Wow. I didn't even do these numbers earlier. This is just it just blows your mind, doesn't it? But what's so cool about this, and one thing that we can all agree on, is this paints it paints a clear picture, but that's wildly understating it. This paints the clearest picture I have ever seen as to how government spending destroys the economy. You see, you cannot. I don't think you can. Maybe you could dispute it some way, but boy, talk about a correlation that is just solid. Bam, bam. Decade after decade after decade after decade, and it makes sense because obviously, if the government is occupying a larger percentage of economic output, that's going to make the economy as a whole more efficient. Or more
less efficient.
Excuse me. More inefficient.
I think that's one thing the Bitcoin maximalists agree with you, George. We hate central planning, we hate governments, and we cross our fingers and toes that a Bitcoin standard decreases the federal government spending as a percentage of GDP.
Yeah, I just want the Bitcoin community, especially the unsophisticated investors, to know that we're talking about probabilities, and to set up your portfolio accordingly. We are not talking about there's a 100% chance that we have consumer price deflation because base money is fixed at 21 million. And that's, as you know, that's about the maximum level of thinking you get from not the smart dudes like Jeff and Saylor and Breedlove, but the majority of the people that are kind of quote unquote Bitcoiners, maybe on Twitter or something like that. That's the extent of their analysis. 21 million, you can't increase it. Therefore, we have a 100% certainty that the price of Bitcoin or the value of Bitcoin relative to goods and services has to go up. So why would I not max out my credit card? Why would I not mortgage my house? This is a certainty. And that's what I get on Twitter all the time. Well, George, this is just math. This is just math. No, we're not talking about math at all. We're talking about trying to decide what real human beings are going to do and tyrannical governments around this, and there's no certainty there.
It's the same thing the central planners do when they're putting up their charts. They're just doing math.
Exactly.
Yeah.
No, I think they're great points.
That's the point I'm trying to get through to people. It's not a Bitcoin negative argument. It's that it's just an argument of how, and I think one of the main problems now that I talk to more and more Bitcoin people is it seems like the Bitcoin community attracts people who are engineers, or at least have an engineering mind, or in the, people in the tech space. So as engineers, you can go onto your computer and you can tell your computer exactly what to do, and your computer will do exactly that. You're living within a system of rules that cannot be broken. And I think what the Bitcoin community, what attracts them is this idea that you can set up a system of rules that will somehow supersede the imperfection of human beings and the world around us. And I think that is incredibly false. I think that's where the Bitcoin dream kind of meets reality there. And that's, again, just what I'm trying to impress upon people. So they just hopefully make better decisions, but then maybe become even more of an advocate of Bitcoin, not because it's a fixed money supply, but because it reduces the size of government. And at the end, that's what's most important.
Exactly. I couldn't agree more, George. I think, obviously that's why I've gravitated so heavily towards Mark's and yourself's content on YouTube. You always talk about probabilities. What's the probability? Let's do a cost benefit analysis. And I agree. I think most Bitcoiners on Twitter, I think another point as well, a little bit of a side tangent. I don't think a lot of Bitcoiners are leveraging credit cards to buy more Bitcoin, because we 100% think the money supply is going to go up, and that means consumer prices have to go up, and that means Bitcoin has to go up in price. I think there's another variable in there, and I think that could be the adoption curve. So right now, the adoption of Bitcoin around the world is it's probably 0.1% when you actually measure how many people in the world are actually storing a majority of their savings in Bitcoin. So I think a lot of Bitcoiners are making the bet that hypothetically, if we do get something close to a Bitcoin standard in the future, it makes a little bit more sense to not leverage up. I'm not a fan of leverage, but I'm just trying to represent their views. Maybe that's a reason they're leveraging up. It's not just solely money printer has to go burr because governments are bankrupt, and that means inflation has to go up. I think that's possibly another variable. We're so early in its adoption that buying some when it's so young in its adoption, that could be why a lot of Bitcoiners are leveraging the farm.
Yeah, and see, that's a great point. And so because that would be an argument that it's just math, and you've got a limited supply, you've got the halvings and all these things. Therefore, if demand goes up, the price of Bitcoin has to go up. But see, that's a good argument, but that's a different argument than the one I'm making, because I'm taking it to the next step, saying, okay, what if Bitcoin now is already money? And we're not measuring it in terms of dollars. We're just measuring it in terms of goods and services, because everything is priced in Bitcoin, including tax revenue and whatnot. So it is a different stage in the process that I'm trying to analyze.
Exactly. And I think as long as you articulate that, like I tried to say earlier, I believe that you're going to see fractional reserve banking on Bitcoin for a couple of decades before you potentially might get close to a full reserve kind of banking style on Bitcoin, hypothetically, talking about different time frames and different, there's obviously different scenarios. I think that'll be good.
What would you say is the greatest benefit of having a fixed money supply?
People can store their time and their energy in something that can't be debased. So they know, they have a better idea of what their savings are going to be in the future. So they can lower their time preference, as Saifedean calls it. And when civilization is incentivized to save, they're incentivized to think for the future. We're no longer just being pushed into debt to buy these plastic goods from China. Everybody has a high time preference, and they're addicted to social media, where whatever gets the most likes, is trending and hot. I think it's hard to say all of that's due to us being on a fiat standard, but I think it certainly contributes. So I think
because again, that I understand your view, but that assumes that we get deflation with a fixed money supply, which if we get enough government, I think it's safe to assume that we might not get deflation even with a fixed money supply. But my question there was, let's just assume that this is true, that if we have a fixed money supply, that the benefits will accrue to the general population in the form of deflation. And this is just a 100% guarantee. If that's the benefit of having a fixed money supply, why would we not want a money supply that decreases annually? Wouldn't we just get even more of a benefit?
So if the money supply is decreasing, does that mean price of goods and services is going up every year?
No. So let's just say you got 21 million Bitcoin, and that's the maximum there's ever going to be. Okay.
Yeah.
And the reason that's good is because it's going to create consumer price deflation, which is going to benefit society in all the reasons that you just mentioned, and all the reasons that the Bitcoin standard gentleman articulates, that Jeff Booth, Saylor, etc. And this is in the society's reaping these rewards as a result of consumer price deflation, which is a result of having a fixed money supply. So if this is true, why wouldn't we, once we get to 21 million, the next year, why wouldn't we start decreasing the money supply? Why didn't we, so we go from 21 million, and then let's say 5 years later, it's 20, and 5 years later, it's 19, and it keeps going down and down and down. Because if you're looking at the delta between a fixed money supply and a growing money supply, and saying a fixed money supply is infinitely better because it's going to produce this deflation, but there's a one-to-one relationship. If we had even more deflation, that would be even better. And the best way to do that is to have a money supply that actually decreases, not stays the same.
I understand your argument now.
So why would we not want a decreasing money supply?
I suppose a Snyder would say that it would incentivize hoarding. People would just sit on their savings if it's appreciating.
But you know where I'm going with that, because you can use that argument with a fixed money supply.
That's right. Yeah,
it's a trick question. It's purposely a trick question.
It's a good one. Nearly got through me.
All right, man. We've been on an hour. Excuse me. Great talking to you. That was a lot of fun.
And that is all I've got time for you guys today. Let me know down in the comments below who you think won that little debate, or friendly discussion, I should say, between George, myself, and Josh. Do you think the Bitcoiners are missing something when we're talking about money printing and inflation? And what do you think banking could look like on a Bitcoin standard? Let me know in the comments down below. And if you did enjoy this video, feel free to slap a like on the video and subscribe to the channel so you're notified for the upcoming interviews we have coming up. Because just next week, we're going to be talking to Josh once again, who was on this little three-way discussion and debate with George. He actually joined me in El Salvador last week for an in-person debate about all of the topics we discussed in today's rip with George. So stay tuned for that. We're also going to be talking with Alex Svetsky about his recent article, Fire, Teleportation, and Bitcoin. We're also going to be discussing what the Kardashev scale is and the Great Filter. And I also have another interview coming up with Rob Hamilton, where we're going to be talking about technological stagnation and why the world of bits has seen so much rapid innovation over the past 50 years. Meanwhile, the world of atoms in our physical world has been stagnating. So if any of that sounds interesting, make sure you subscribe to the channel so you're notified for when those interviews drop. And final little reminder, guys, grab yourself $10 off a Foundation Passport. If you want a hardware wallet, you can use the link in the description to check out one of those. You can also get 10% off your Bitcoin Miami 2023 tickets if you use the promo code and the link in the description of today's show. And if you need any help setting up a hardware wallet like a Foundation, or from any technical issues that you may be having, make sure you check out CoinBeast Connect. Everything is linked below. And without further ado, I hope you guys have a good day, and I'll see you on the next video.